when we are dealing with the paper that was tested in, that is the pilot paper of December 2021. The pilot paper of December 2021. Remember when we met tracks, we had discussed question 1. So today we should pick from there and discuss question 2. Question 2 says you explain those terms: material variances, labor variances, and standard costing. And I believe that from our notes, we are in a position to explain that. Now, from there, part B, we are told to produce a liter of a product, 24 units of materials are required at a standard price of 75 per liter. The actual production for the period is 75,000 units. Records proved that 80,000 units of materials were used at a price of 73 per unit. You are required to get material cost variance. Now, in getting material cost variance, I told you material cost variance, it is equal to standard material cost minus actual material cost. Standard material cost, you minus actual material cost. Is the writing visible? Well, Tirao and Vera, is it visible? Okay, good. All right, so if that is the formula, then what you do, we are told that to produce a liter of a product, 24 units of raw materials are required at a standard price of 75. So the standard price per liter is 24 times 75. That is the standard price or the standard cost of 1 liter. There, good morning and welcome. Now, you are supposed to multiply that by the actual units that were produced. And we are told in actual case, they produced 75,000. They produced 75,000. And then the record showed that they used 80,000 of materials at a price of 73. So the actual cost will be 80,000. You multiply by 73. You multiply by 73. So that is what will give us the material cost variance. Waiting for the answer. So I adjust my camera. Okay, now it's well set. Okay, 129, 160. 129,160,000. Is it favorable or adverse? Favorable or adverse? Negative or positive? It's favorable, so it is positive. Okay. The next one is material price variance. So tulisema material price variance is equal to standard price minus actual price. You multiply by actual quantity. Material price variance is equal to standard price minus actual price multiplied by actual quantity. Jemima, good morning and welcome. Haya, sasa we are told that the standard price was supposed to be 75, but they actually got it at 73. The actual quantity of materials that was used was 80,000. So tell me what is the answer there? $160,000 favorable. It's 160,000 favorable because we paid a smaller fee. We paid a smaller fee. Okay, then the next one is the material usage variance. So material usage variance should be given as standard quantity minus actual quantity. You multiply by the standard price. Standard quantity minus actual quantity multiplied by standard price. So standard quantity, it is supposed to be the units that one unit was supposed to use at the production, the units of raw materials. So 1 unit of production was supposed to use 24 units of raw materials. 1 unit of production was supposed to use 24 units of raw materials. So when we produced 75,000 units, that tells you how many units of raw materials we should have used. But you compare with what we used here, 80,000. Multiplied by the standard price of 75. Though according to me, that question, there is a typo error. Yeah, either this one should be karibu 8 million or this should be 2.4, something like that, but nonetheless, we just work what is available. $129 million favorable. 129 million, which is favorable. And as you can realize, or you can remember what I told you, is that if you add usage to price, they should give you the total. Now this 129, you get a 160, you will have. That is how they are reconciled. So let's go to the next question, number 3, 3A. And I told you to really pay a lot of attention to the theory questions. They are very, very important. Let's go to 3B. Kasap Limited manufactures plastic bottles by mixing materials. The following information was obtained from their management accountant during the month of October. Materials used were 12,000 kilos at 13 per kg. 12 employees worked 120 hours each at a rate of 25. Fixed overheads were absorbed at a rate of 100% of direct labor cost. Actual output was 10,000 units. There was no opening or closing work in progress. The company expects a normal 10% of material. That should have been a normal loss. Normal loss, 10% of materials input. There is no waste or scrap in the process. So calculate the expected cost per unit. I don't know whether we solved that question in class. Yeah, I can see Sirao telling me that was done. Good. So if that was done, we skip and proceed to question 4B. Was it done in class? 4B? Did Mwalimu solve it in class? Yes or no? The one on high-row method, the simple regression. So it was not done in class. Hey, you are giving different opinion. Vera is saying it was done. No. Vera is saying it was not done. Sirao is saying it was done. Let me get that opinion now, so that we know whether we do it or we skip. The others, Jemima and Leah, you can also help us to know whether that question was done or not. Okay, so the others are not responding. So Vera, you are saying it was not done. Sirao is saying it was done. So what do you want, Vera? We do it. Okay, even Sirao is saying we do it. Jemima has added her voice that it was not done. So then we are going to do it. So if we are going to do it, question 4B inasema, Car Limited produces masks for sale. The following information was provided for the last 8 months in mask production. So we are given that from the cost estimation, or formulate the cost estimation for the costs of producing 10,000 masks using high-row method. So let's start with the high-row method. High-row method. When you're taught to use the high-row method, we use the equation whose format is y is equals to a plus bx. We use the equation whose format is y is equals to a plus bx. Now, you go to the column of masks. Obviously, masks will be our x. And the cost will be our y. The costs are the ones that are depending on the units. So, unaangalia hapo kwa masks. Tell me the highest number of masks. The highest number of masks that you can see there. The highest number of masks. Sirao, the highest number is 9. Good. So 9 is corresponding to a cost of 72. So you say 72 is equals to A plus 9B. This is the highest. And you should remember, before I talk of that, give me the lowest. The lowest number of masks. The lowest number of masks is 5. Good. 5 is corresponding to 50. This is equal to A plus 5B. And this is the lowest. Now, what I wanted to insist is when you are going to select, we only select for the values of X, the highest and the lowest. We do not also select for the Y. For Y, we are guided by X. You remember a bit of your QA where we said that Y is a function of X. So the value of Y is guided by X. So it may happen that B72 is the highest of all. And when you check, that is okay. But if, for example, you are 8 shillings, 8 masks, which is 66. If it was 66, if it was not 66, but it was 76. if the one corresponding for 8 was 76, and the one for 9 was 72, we would still have picked 9 and 72, but not 9 and 76. But not 9 and 76. Because we are bringing the cost of the 9 units, the cost of the highest number of units, not the highest cost, but the cost of the highest number of units. The same case with the lower point, the lowest. We are bringing the costs of the lowest number of units, not the lowest cost, but the cost of the lowest number of units. Good. So with that insistence, we can proceed now and come here and say, if I subtract, this will give me 22, and this will give me 4b. So tell me b is what? B is what? The value of b from there is 5.5. And it's good to know that this 5.5 is the variable cost per mask. The variable cost per mask. The variable cost per mask. Then ukuja hapa useme 72 is equals to A plus 9 times 5.5. So based on that, tell me what is the value of A. $22.5. 22.5. Now this one, you should also get to know that this is the fixed cost. So hence, y is equals to 22.5 plus 5.5x. And remember, this equation is in thousands. This equation is in thousands. Our figures, all of them are in thousands. So for 10,000 masks, for 10,000 masks, the total cost, which is our y predicted, will be 22.5 plus 5.5 times 10. Or 77.5. And I still wish to remind you that if you are using the figures in thousands, ikiwa full, it should be given as maniandike hapa instead of moving the camera. Tukaitatosea hapa. Or if you want to move to use the thousand, then hii ndio unabadilisha. Sasa itakuwa 22,500 to convert this one. But the value of B, I told you in our last lesson, it remains so that you have times 10,000. Now, if you do so, you should get 77,500. You should get 77,500. So that is how you change. If the equation is in thousands, kuja hapa unahakikisha umeweka the value of x ikiwa in thousands. Lakini kama unataka kubadilisha, then unabadilisha the value of A, you multiply by 1,000, but B remains. Sasa hapa utumie ikiwa full. Good. Haya, tuende nao kwa huyu mwingine. The next one inaitwa simple linear regression method. Simple linear regression method. Regression method. So in the simple linear regression method, I told you we prepare 4 columns. The first column is for X, where we have 5, we have 6, we have 6.5, we have 6.7, we have 7, we have 7.5, we have 8 and 9. So first of all, give me the total of those X's. Give me the total of those X's. $55.7. 55.7. Let's go to Y. Y, it is 50, 53, 55, 59, 62, 64, 66, and 72. Give me the value of the total there. Waiting for the totals of Y. $481. Let's now create a column where X is multiplied by Y. 5 times 50 is 250. This should be 318. I want you to continue that way, then unitumie the total hapa. Ndio namna hiyo, unitumie the total down there. Yeah, 3410.8. 3410.8. Let's get the column of X square. The column of X square, which is supposed to be, this is 25, this is 36. So, I'm already given 398.39. 398.39. So if that is the value, I told you the formula for B. You now come and write the formula for B. B is given as n sum of xy minus minus sum of x minus sum of x sum of y You divide by n sum of x squared minus sum of x. You square this. So here, n, they are 8 values. The sum of x, y is that 410.8 minus sum of x is 55.7 and sum of y is 481. You divide by 8 times sum of x squared, which is 398.39 minus sum of x, that is 55.7 times 55.7. 55.7. So when you do that, you will be able to tell me what is the value of B. Value of B. Yeah, I can see two values, 5.85. Good. 5.85. And it's also good we label this is the variable cost per month. And you can see what this method is giving us as variable cost per month is different from what the other method had given us. And all of them are okay. All of them are okay. And I told you that's why you find that different companies selling the same product at different prices. Because it all depends on which method you used in arriving at your cost and price eventually. So A is given as the sum of y minus B sum of x. You divide by n. So our sum of y is 481 minus B, which is 5.85 multiplied by x. X, sum of x is 55.7. 55.7. The whole of this you divide by 8. 19.39. 19.39. So this is our fixed cost. And therefore, our equation is y is 19.39 plus 5.85x. And remember, this equation is in thousands. The equation is in thousands. So for 10,000 masks, total cost, which we are saying is y predicted, should be equal to 19.39 plus 5.85 times 10. Because our equation is in thousands. $77.89. $77.89. Okay, so I think we are done. Yeah, if you are using it in full, we are using the equation hapa ikiwa 19,390. I think that is what Leah has done. 19,390 plus 5.85 times 10,000. Then you should be able to get 77,890. Yeah. Oh, there, you should have gotten this one. There should be a zero that you should have gotten. There. Leah, have you gotten that? Oh, you meant, okay, you meant 77.89. Okay, good. Haya, so hiyo tumemaliza. Features of process costing, they are well articulated in our notes. We got to part D, which I do not think we solved in class. Inasema BB Limited produces food which passes through two processes A and B. then to finished product. Normal loss is estimated at 590 for each process and 10% scrap, which realizes 80 for process A and 200 for process B per unit. Okay, the following information is obtained. We have material, cost of materials per unit, wages, other direct expenses, output in units. Process accounts for the two processes, assuming there was no stock. Okay, did we solve that question in class? Yes or no? Did we solve? Okay, so if we did not solve, then we can solve the question. We can draw process accounts. So in the process accounts, we have details here. We have units. We have costs. Then we have amounts. We have details. We have units. We have costs. Then we have amounts. So if you are there, this is now process 1, or they are calling it process what? Process A account. Process A account. So in that process A account, tunaambiwa the materials. They are 1,000. And the cost is 125 per unit. So this will be 125,000. Then we do have the wages. The wages is 28,000. Other expenses, let me just call them expenses. The expenses, they are 8,000. 8,000. And then hakuna mpaka overheads. So that is good. So the output that is going to go to process B. Process B, we are told it is 830. 830. Normal loss is estimated at 590 for each process and 10% scrap. I want to change that. Here in Asoma 590, it is not practical. It's not practical because okay. But I would have guessed it was supposed to be 5%. Would have guessed it to be 5%. So if we take it 590, we are going to realize a very huge abnormal gain, but it's still okay. Let me take it the way it is. Let me take it the way it is. But from my perspective, this should have been, instead of 590, it should have been 5%. So if it should have been 5%, tukikuja hapa kwa normal loss, you would have said 5% of 1,000. 5% of 1,000 is how many units? It's 50. So my normal loss would have been 50, and then sasa hiyo ndio ningeweka hapa. But if I go by this, what is reading there, then I will simply come and put 590. And I want us to go by what we can see the question paper, because maybe the examiner, that's how he had said it. But I'm saying, kama ingekuwa 5%, that's what you'd have done. Hiyo 50, ungeweka hapa badala ya 590. Haya, let's proceed. Then we are told there is a scrap. Now the scrap is like the other one for abnormal loss. So that one, we are told it is 10%. It is 10%. So 10% of this 1,000, that gives us 100. That gives us 100. It's 10%. So, and we are told this one is being sold at 80. Now, I told you that the scrap is supposed to be valued appropriately. What we normally sell is the normal loss. So this normal loss is the one that we shall come and put 8 there. It's also part of scrap. So these are the ones should be valued appropriately. Haya, sasa with that, nafikiria tumemalizana na process A. So what we do next now is to get the unit cost. The unit cost is the total cost. So add this cost. Hiyo swali sidhani itatusaidia. Wacha tu. Add this total cost, 125 plus 28 plus 8,000 is how much? 161,000. You might have this one, which is already here, 590 times 80. 590 times 80. 590 times 80 is what? 47,200. So here, 47,200. So I subtract that. Then we divide by what? The input, 1,000 minus the normal loss of 590. The input, 1,000 minus the normal loss of 590. $277.6. 277.6. So hiyo 277.6 ya unakuja unaweka hapa. 277.6. 277.6. This one will be 27,760. This other one. 830 times 277.6. It's something I forgot to do, but we are not late. Give me 234.8. 234.08. Before we computed, we should have balanced the units. I forgot that, but the beauty is that we are not late. So tell me the balancing figure. This is 830, 590, 100. And this one, tell me the balancing figure. 520. So sasa hiyo itaandikwa hapa, abnormal loss. Not abnormal loss, abnormal gain. That abnormal gain of 520, it is still valued at 277.6. It is still valued at that. So multiply 520 at 277.6 will give us what? 144,352. 144,352. So that account now, it should almost balance. I'm saying almost because ukiona kuna decimals, we are likely to miss by something small. Decimals create an error. So that is how it's supposed to be done. Now with that, we quickly now do the process B account. Process B account. Process B account. We could do now process B. Accounts. Now in process B, we have details, we have units, we have cost and amount. Details, we have units, we have cost and amount. So with that, we now bring what came from process A. Process A to relate 830 at 277.6, a total of 230,408. There were materials that were added. These materials were 70 of them, each at 200. So this must have been 14,000. 14,000. Then we do have the wages, is 10,000. And then we have the expenses. The expenses is 250. Then we have the output now here. The question says is 780. Then we are still told the normal loss is 590, because they say it is for each process, and when we are in process 2, it is going for 200. For 200. Then we have the scrap. Now the scrap will be arrived at 10% of 830 plus 70. 10% of the 830 plus 70, that is 900. So that must be 90. So the scrap is 90. The scrap is 90. So with that now, can you tell me the balancing figure? This is 900. This plus this plus this, get the difference. Obviously, that would be abnormal gain. To be abnormal gain. Oh, there are already given. There are also 560. So with that now, we proceed there and get our unit costs. So first of all, tell me this 590 times 200 is what? 590 times 200 is what? 118,000. So this is 118,000. So tell me the cost here, these total costs. The 230, the 14, the 10, and the 5. 259, 658. 259, 658. You minus the 118,000. Now this one, you should divide by the input, which is 900, minus the normal loss of 590. The normal loss of 590. $456.96. So hiyo 456.96 unaiweka hapo, unakuja unaiweka hapa na unaiweka hapa. So unaiweka hapa kwa abnormal gain, unaweka huku kwa scrap, na unaweka hapa kwa output. You multiply, that will be fine. So that with that, so we still have a lot of time. Now we can close to the next paper. The paper of December. (2021). So in the paper of December 2021, that EOQ, was it done in class? Yes or no? Yes, it was done. Part B, I think I'm the one who solved that. Is that so? You're Ariba. Did you do in class? I'm talking about part B. Did we solve in class? Yes or no? You're not sure? Check your notes on Rebel costume. It is a question that I remember. It's a question we solved in the handout. It was in the handout, but specifically this one. Can you confirm, or you want us to solve it? Guide me, I'll do either. I'm waiting for your direction. Do I solve? Do I proceed? Okay, okay. Sawa, then I'm told to solve. But when you check your notes, I remember, I have now clearly remembered when I taught you river costing, we never solved a past paper question. I came with questions that were in a handout, but those questions they're easy or similar, even if not figure to figure, but the style. So let's solve. Inasema Usenge Products Limited manufactures and retails products A, B, and C. The company has 120 workers who work under a group bonus scheme. The workers are categorized into 3 grades and are paid a bonus of the excess of time allowed over time taken. The bonus paid is 80% to the workers' base rate and is shared by the workers in the proportion of time spent on the job. The following production data has been extracted from the company's records for the month of November. So we are given the product, the units produced, time allowed per unit in minutes. So we have the grade of worker, the number of direct workers, the basic rate per hour, and then the hours worked per worker. So percentage of bonus hours saved to hours taken. Now, for you to get the hours saved, you need to come here and say the hours saved should be equal to the hours around minus the hours used or taken. That is the formula that we have been talking about. The hours that have been around, you less what was taken. Sasa, you can see the hours that were around, they are given in terms of the product. So the hours around is supposed to be 640 times 63 plus 1280 times 120 plus 2400 times what? Times 100. Now all these you divide by 60. All that you divide by 60 because they are minutes. So that we are able to know what was the total time allowed for these guys. The 2232. I could have written it here. 7232. Then the hours taken. The hours taken. The hours taken. Utaenda hapo chini uone kwa grade, the number of workers and the hours they worked. Grade 1, it was 40 times 30 plus 16 times 64 plus 64 times 50. $54.24. And therefore, hours saved will be 7232 minus 5424. $18.08. $18.08. So tunaulizwa percentage. So percentage will be the hours saved, 1108. We divide by the time taken. The time taken is 5424 times 100. So tell me that is 33.3%. 33.33%. The bonus that is due to the group. So we are told that this bonus is paid 80% of the base rate and is shared in the proportion of the time spent. So sasa hapo itabidi tukuje hapa tuseme we have the grade here. Hiyo ni grade 1. Hours taken. Hours taken is 40 times 30. So tell me 40 times 30 is what? $1,200. So the bonus will be the proportion. We are going to have the proportion times hours saved, times base rate. That is how we are going to get the bonus. Hope you have space. That is how we are going to get the bonus. You have the grade, the hours taken, and the bonus. So the proportion here will be these 1,200. You divide it by what? You divide it by the total hours that were worked. 5424. That is the proportion. You multiply by the hours that were saved, 1808. Ndio ujue how grade 1 watapewa how many hours of those, because we work with total. Then you multiply by the base rate. The base rate in grade 1 is 300. So that is how we shall get the bonus that is due to that group. Is the figure already 120,000? The different one. Okay, 120,000. Let's come to grade 2. Grade 2 ilikuwa na 16 workers, kila mtu akichapa 64. So 16 times 64. Tell me how many hours are those ones? 16 times 64. 1024. So nikikuja kutafuta proportion, nitasema ni 1024, you divide by the total 5424, multiplied by these hours that were saved, multiplied by the base rate, which is 270. $92,160. 92,160. Then grade 3. Grade 3 ilikuwa na 64 workers, kila mtu akichapa 50. So 64 times 50. That's 200. So in the proportion, I will have that 200, which is divided by 5424, multiplied by 1808, multiplied by the base rate of 240. $256,000. $256,000. So I think that is okay. Then the gross earnings due to the group. The gross earnings. So if you are told to get the gross earnings, down there again, you have a tabular presentation. The tabular presentation, where we will start with the grade. We'll have the grade, that is grade 1. Then I will have the bonus. The bonus here is 120. Already computed. Then I will have base rate. Base rate times hours taken. Hours taken. And that is going to give us someone we call the basic pay. It's going to give us someone we call the basic pay. And then here we have the bonus plus basic pay. Bonus plus the basic pay gives us someone that we call gross pay. It can be presented that way. Sasa we go step by step. Ukikuja kwa grade 1, the base rate is 300. And these guys, we are already in the know. They did 1,200 hours. So tell me 1,200 times 300. $360,000. So if it is 360,000, The bonus here is 120,000 plus 360,000. That is 480,000. That is the gross pay. I proceed on to grade 2, whose bonus is 92,160. The base rate is 270. And the hours taken are 10:24. The hours taken are 10:24. So that gives us 276,480. 276,480. So if I say 92,160 plus 276, 480 will be 3 what? 368. 6 what? 640. 368, 640. Then I come to grade number 3. The bonus is already known to be 256,000. The base rate we know is 240. And the hours we know they are 3,200. So that gives us what? 768,000. So if I take these 256,000 plus 768,000, that gives us 1 million and what? Huh? 1,024,000. That 256,000 plus 768. So the total, you can get the total now. You can get the total for each, total for bonus, total for basic, and the total for gross. You can get the totals for each there on your own. And then read question 2, Roman 1 on your own, coming with so. Where are we to use 80%? I forgot that. It's paid at 80%. That 80% should have been here. So itabidi urudi hapa. We should have put it here. So multiply by I forgot. Should have been 80% of this. Thank you, Vera, for reminding me that. So instead of changing, just note that 80% or the bonus is supposed to be 80%. It have multiplied by 80%. So those figures would have changed. Yeah. Sorry for that oversight. So today multiply half 80%, 80%, 80%. So we'd have gotten a different. Kama ingekuwa 96,000. So hii 96,000 get hapa kwa bonus 96. You add to this one. Is that okay, Vera? Okay, good. Sasa, I'm saying now we go to question 2, Roman 2. You read on your own. Not unless you tell me we solved that question. Question 2, Roman 2 of A. Just a minute. Okay, did we solve that question in class? Hmm? Did we solve in class? Okay, no. So inasema Zaidi Industries Limited produces two products, branded A and B from the same material. The cost of material is 9.5 per kg and the two products appear after process 1. Product A can be sold directly to the market, but product B requires further processing in process 2. The following data relate to the month of October 2021. So we have process 1 and process 2. The product, we are given the quantity sold and the closing stock and the sales in shillings. Additional information is that there were no materials on hand at the end of month of October. The company uses the sales value method of apportionment for joint costs. Now determine the total cost of products A and B. So this one, we can either draw a process account or we just go straight. And this one we just go straight because haina mambo mingi, haina mambo na normal loss and abnormal whatever. So the first thing is joint costs. Let's get the joint costs. So the joint costs are the ones which are in process A, because that is where we are told that the two products are being produced together, or process 1. So material is 1,440,000 plus 210 plus, it is already given. It's already given, but it's good we confirm. That is 1.8 million. 1.8. Okay, that is the... Okay, the further costs, what we call further costs. For B, it is the cost that are incurred in process 2, because hiyo ndio tunaambiwa it is going to process 2. So it is 100 plus huyu mwingine naitwa nani? 180,000. So this is what they have given us as 280,000. So if we are using the sales value method, to apportion, so we are going to have maybe as a working, we can have a selling price per unit or output of product A, output of product A. It is what was sold. You can see we are told they sold that 1,000. And the clothing stock, ikabaki 15,000. So that tells you they must have produced 45,000 units. 45,000 units. And then output of product B, that one, it is 45,000. 45,000. is already given. 45,000 units. Something else that could be of interest to us is the selling price. Selling price per unit of B, not B, unit of A. Per unit of A. You can see they realized 525,000. And this is after they had sold 30,000. After they had sold 30,000. So tell me what was the selling price? $17.5. So even in 17.5, I don't know whether I need selling price for B. Ndio tupange. Let me get it so that tuipange tu venye huwa tunapanga. Let me not shorten it. Selling price per unit of B. Per unit of B. It is 1507,500. Divide by the unit that was sold. At 3.5. So now, apportionment of joint costs. Apportionment of joint costs using sales value method. Sales value method. I told you here, we start with the product. We start with the product. So we have A. We have B, they're just two. And then I will have total. Then we bring the units. The units, this one they are 45,000. Even this one they are 45,000. So that means the total output must have been 90,000. Then Kakwabia, the next one we bring is price, 17.5, that 3.5. Sasa nataka uniambie value 17.5 times 45,000. 17.5 times 45,000. 787,500. Now we are supposed to use this one, not this, because this is the value we had gotten for that 1,000. But remember the cost we are sharing for all the units that were produced. All the units that were produced. Then this one is 1,500,000. 507,500. Add these two now. Give me the total. Martin, good morning and welcome. This plus this. $2,295,000. $2,295,000. Let's get the percentage. Percentage, tukasema now you express each one here as a percent of the total. So let's start with the first one. 787,500 divided by this total times 100. %. So 34.31%. And I told you that the total must exactly be 100%. So subtract now this one from 100. Nipatie the difference, because the total must always add back to 100. 65.69. 69%. And then the joint cost that we are sharing is this 1.8 million. So the total cost here, the total cost. So what you do is you now give me 34.31% of this one. 34.31% or 1.8. $617,580. And the balance. $1,182,420. So divide your per unit cost. If you divide by the units, that gives us the unit costs. When you divide B, I'm told 26.276. Higher A, 13.724. Now, those are the joint costs, but the examiner alikuwa ameuliza nini? Determine the total cost of products A and B. So, the total costs so I will need to come back here and say I'll need to come back here and I think I can rub this now. I can rub, but I use that. So I can make my summary like this. I have details. I have product A and I have product B. So the first thing that I need to bring is called joint costs. Joint costs ni hii 617,580. Na huyu mwingine ako na 1,182,420. Then I bring other costs. Product A is not going for further process, so it has a 0. But B, it is going for further process at 280,000. So with that, I'm able now to tell what is the total costs. So this is 617,580. That is the total cost of product A. Now tell me for B, it will be what? For B, these two, when you add, you get 1,462,420. Yeah, I can see we have 10 more minutes. We can finish up part B. Ndio hiyo swali tukue tumemaliza. We are told the following data was provided by the cost accountant of Miradi relating to marketing expenses and sales for a period of first 8 months. So we are given that. Preliminary calculations have established the following. So we are given all that. Now predict the total marketing expense for the 9th month. So the figure that is not provided, we have what? We have the sum of X. So what we do not have is the sum of Y. Because the others have been provided. The others have been provided. So that question is on simple regression analysis method. Simple regression. And remember, this is also what we call the ordinary least squares method. It goes with those two names. The simple regression analysis, or you can call it the least ordinary least squares. Some people just call it least squares. To all those go hand in hand. So from what we have been provided, we are able to tell that what is missing is the expected value of or the sum of total marketing expenses. Total marketing expenses. So the total marketing expenses, I want you to add them. Your hizo ziko hapo 265 plus 302 plus 222 plus 240 plus 362 plus 295 plus 404 plus 400 plus 400. And the figures are in millions. No, in thousands. Yeah, in thousands. $24.90. Those figures are in thousands. But what I'm wondering is, Ebu add for the sales units. Ebu add for the sales unit tuone so that we confirm. Because unaona hapo chini wanakuja kusema ni 4640 million. Sasa nashangaa, Ebu add 20 plus 24 plus 16 plus 18 plus 26 plus 22 plus 32 plus 30. Hizo za mwisho ujue the typo was not done well. Zinakuja 188. Sasa I don't know where now they are getting that. If we are getting 188, na unaona hapo wamepeana 4640. Now that is where the hard nut is. Which one now do we use? Because I was expecting us to have Ebu square that value. Square that 188. Even when you square is not coming to 4640, we are getting 35,344. So I think those values are, first of all, I would disregard them on two grounds. I would disregard those totals. Because unaona hapo juu tumepewa the values are in thousands. So how they are coming to be in millions down there, I don't know. Number two, at least when we add the sales units, they should have agreed. They should have agreed. Either as seagulls or when we square, but none of them is agreed. So I think we shall go with what Vera is saying. We go with the table. So if we are going with the table, so we already know the sum of sales units. The sales units, we have found it to be 188. So what we need to do, you can put these figures in the tables, in the calc, without preparing the table. Just put this one for the, I hope you are able to do that. I want us to get the expected value of the expenses times units. Aya, weka kwa calculator, tusonge pamoja, useme 265 times 20 plus 302 times 24 plus 222 times 16 plus 240 times 18 plus 362 times 26 plus 295 times 22 plus 404 times 32 plus 400 times 30. Tell me equals what? $61,250. Someone else confirm. Already received that from Vera. The other. Okay, the notable, I go by that. Then the expected value of sales units when they are squared. Yes, Jemima, good. So let's square the values of x as we add. So weka kwa calculator useme 20 squared plus 24 square plus 16 square plus 18 square plus 26 square plus 22 square plus 32 square plus 30 square equals 4640. Ama ndio hiyo imepeanwa hapo. So basi inakaa basi inakaa the value mlikuwa mmenipea ya 188 was wrong. Huh? Oh, sorry. We squared the total. We squared the total. Na hizi tumepata, kuna mahali zinakubaliana 61,250. Oh, ndio hiyo 61,250. Ndio hiyo. Marketing. Oh, so their values are okay. So what is missing hapo kwa in-sales unit ni hiyo ka square. Hii ka side hapa. Hii 2. Okay, but now while they are making it millions or making them millions, sijui, so tutaendelea tu namna hiyo. Let's come here and say B is given as N sum of xy minus sum of x sum of y divided by N sum of x square minus sum of x. So sasa N, we know they are 8, sum of xy, your hii 61,250 minus sum of x tulipata 188, sum of y tumepata 2490. You divide by 8 times sum of x square, ndio hii 4640 minus 188 times 188. So give me the value. Waiting for the answer. $12.32. Then the value of A is given as sum of y minus b sum of x, you divide by n. So this will be sum of y, which is 2490 minus 12.32 times sum of x, which is 188. You divide by 8. Then you tell me what is the answer. With 1.73. With 1.73. So our y will be 21.73 plus 12.32x. So when x is 44,000 units, 44,000 units, y predicted will be 21.73 plus 12.32 times 44. 21.73 plus 12.32 times 44. $563.81. 563.81. Good. So we call it a day at that point so that those who are rushing to work can be able to manage. Then we hope now to meet in our last lesson. That should be on Friday. Friday should be our last lesson, unless you advise me otherwise. But we meet on Friday the same time at 5. Friday, the same time at 5. Thank you. Thank you so much.